Good day, grade 11s. My name is Patience Ngobeni, and I will be taking you through today's exciting revision lesson on business ventures. Now, remember, grade 11s, that this is revision, so I will only be highlighting the most important points that you must remember in order for you to do well in your examination. Now, in this lesson, we are going to be focusing on forms of ownership and avenues of acquiring a business, as we have already talked about the other three topics in the previous lesson. Now let's start with forms of ownership. Remember that forms of ownership looks at the different types of businesses that exists. Now we have companies that are different, that do things differently. So you must know them and their characteristics. And also very important, you must know what a prospectus and a memorandum of incorporation is. Now, grade 11s, let us look at the revising keywords that you will come across in today's lesson. Firstly, we have the word limited liability, which means that the owner's assets cannot be seized to pay the debts of the business, which means that we cannot take the owner's personal assets to pay off the debts of the business. Whereas unlimited liability is defined as the owner's assets can be seized to pay off the debts of the business. We also have the word audit, which is the process of checking business accounts to make sure that the operations are honest. Lastly, we have the word directors, which means that it is the people elected to the board of a company to represent the shareholders' interests. Now let's look at the common errors that you can make in this chapter. Remember that we have limited and unlimited liability. This is a very important concept in your examination, as it also continues to the next grade. So when we talk about limited liability, it means that the owners of the business are not personally liable for the debts of the business. Now, I will give you an example. So if it happens that the business is bankrupt, because you have limited liability, the bank will not take any of your personal assets to pay off the business's debts. But if it's unlimited, it means that they are going to take your personal possessions in order for them to cover the debts of the business. It is also common that you can confuse the memorandum of incorporation with a prospectus. Now, you must remember that a memorandum of incorporation consists of the roles and responsibilities, whereas a prospectus is simply a document that is used to advertise the business's shares. Then lastly, it is possible that you might have a problem with stating the characteristics of different forms of ownership. Now, what I can say to you, grade 11s, is that in order for you to be able to know the characteristics, you must first familiarize yourself with the different forms of ownership. So you must study well and know what each form of ownership is about. Then it will be very easy for you to identify these forms of ownership in the given scenarios. Now, these are the different forms of ownership that we are referring to. We have a sole trader, a partnership, a close corporation, private companies, personal and public companies, and also state-owned non-profit and cooperatives. Now let's look at the differences of a partnership and a sole trader. Now remember that the word sole means one, which means that this is a type of company that is owned and managed by only one person. Now, this is different to a partnership because the moment you say partner, it means that there is more than one person involved, which is why it is owned by more than one person. Then also very important to note is that both of them have no continuity, which simply means that if in a partnership, one of the member leaves the business, then the business must close and a new partnership agreement must be opened. And in a sole trader, when the owner dies or the owner decides not to operate anymore, it automatically means that that business must close. Then when you look at a private and a public company, you must note to say that the business name of a private company ends with Pty Ltd, which is very important because it will help you to identify the type of company in the scenario. And a public company only ends with Ltd. Then it must be managed by at least one director if it is a private and at least 3 if it is a public. Now also, what I will emphasize here is that when we are dealing with private company, we are having limited liability, and in a public company as well. But when we talk about a personal liability company, the word personal liability already tells you to say that the shareholders are liable for the debts of the business, which means that they have what? Unlimited liability. Now let's look at the benefits of having a company over all the other forms of ownership. It is in the legal status and liability. Very important. Remember, I said to you, you must know the differences between limited and unlimited because it forms the basis of whatever we are doing. So it is a benefit to have a company because you have limited liability. So it means your personal assets are not at risk of being seized when the business goes bankrupt. Then also it will tell you there that when you are forming a company, you are going to have certain challenges. Now, the challenges that you can have, the most common one is the taxation requirements. So if you are establishing a company, you must note to say that you are going to have to pay tax. Whereas when you have a sole trader, you are not going to pay tax as a company or as a business, but only on the income that you earn as the owner. But if you have a company, the business's profits are going to be taxed as well as the profits, as well as the salaries rather that are earned by the directors and the shareholders of the company. Now let's look at the memorandum of incorporation. You must remember that it is a document that describes the rights, the responsibilities, and duties of shareholders. So when I'm holding this document, I am able to see what is my responsibility as a shareholder. Then in that memorandum of incorporation, we must have these contents, including the name, the nature, as well as the main objectives of the company. Whereas when we are talking about a prospectus, we are talking about a document that is used to invite the public to buy shares in our company. Now remember that a prospectus will only apply to public companies because they are the ones that are allowed to sell the shares to the public. Now grade 11s, I know that you might find this as a lot to take in. So I am going to give you a few minutes to think about what has been said, and then I will see you after an ad break.